Hey everyone, it's July 18th, and this is Chico. You got Chico here on this buying and selling stock series on my channel. And our portfolio since March 12 is at 151K and change, almost 152 right as we speak. We started with 100K, and so within a short amount of time, relatively short amount of time, several months, we're already at we're up 50, almost 52%. And we've been swapping a few stocks here and there, and I'm contemplating about doing a spreadsheet that we can go over for especially the people who are joining, so that we can have a refresh on what happened to bring us to such a remarkable return and level. Uh, so right now in our portfolio we have Tesla. We sold off recently Avago Broadcom to switch to Tesla, and I thought it was a good entry point for Tesla, given some of the negative news around it. And but still, they have robo taxis and humanoid robots and other tech on the horizon. I think also they're going to vote to see if Tesla shareholders are eligible for XAI shares, which is their Elon's AI startup. Other things we have is we have a little bit of Cisco. You know, Cisco is a gigantic networking company, but also optimizing their network equipment for data centers. So we'll see how they do in the next quarter and decide if we want to hold on to them or liquidate them. And then, yeah, there's Robinhood. Before we get to Robinhood, there's Carvana. Carvana is at all-time record high. It's done really well, been profitable, and continues to do so. So there were some short sellers earlier this year, and recently, that try to steal away its thunder, but it has recouped from in both instances. And then in the recent quarter, there's also been insider selling too. But nevertheless, it's up there. So do we hold on to Carvana? I think for now we do, but it's one stock that I would consider maybe in the future to switch to something else with higher growth. But for now, I would hold on to Carvana, or maybe just to sell off some and move it into something else. But no action now. And then Meta, Facebook, they're cracking the whip, and they're pursuing artificial intelligence at a very aggressive pace. I really like what Mark Zuckerberg is steering the company towards. And so, yeah, this one's also paid off handsomely for us. You can see the profit and loss margin column over here, and most of these have done really well. And Tesla being relatively new, and Cisco. Of course, we have other ones that we've sold off, and it's not showing here, such as Avago Broadcom. And then there's Robinhood. So I want to talk about Robinhood. Robinhood has been the darling of our portfolio, and it has the highest percentage of the holding in our portfolio, and it continues to surge. Today it reaches a record high of past 110. I think it had almost 112, 113, or almost 113, and tapered back down to 108. I believe that has related to Trump's signing of the support for stablecoins. That could be it, but I'm not sure about that. Nevertheless, Robinhood continues to do well for us, and I feel like, a lot of the analysts have pegged their the price target around $100 and below, $90 to $100, and it's broke above that. I think with all the excitement coming from Robinhood, it's definitely something that I would like to hold on to, and given its market cap size, and see what they report in the next earnings, and also what kind of how things are going with the release of various features in their product roadmap. Now, this past week, what's interesting was, let me bring this window up, is ASML. They reported earnings, and they had a good quarter, but their 2026 forecast was disappointing, and so they took a dip. They went from 820-ish to 730-ish, as you can see in this graph, in this 5-day graph. And the reason for that was their 2026 outlook was what they say underwhelming. Here they were quoted, looking at 26, we can see that AI customers' fundamentals remain strong. At the same time, we continue to see increasing uncertainty driven by macroeconomic and geopolitical developments. So, yeah, I'm a little surprised that there's they're a little bit rattled, given that they're one of the leading, if not the leading, chip making equipment maker out there. And I would think that a lot of also with the growth of chip production in different countries, since national security is becoming a big deal, and the supply chain is becoming national security, a thing of related to national security. That the more chip plants are being built, and more, not only new chip plants, but the present chip plants would want to order more equipment if they can. So yeah, a little surprising. But on the other hand, TSMC, the chip maker, they make chips for companies. They do actually do the fabrication. They had a really good quarter, so their revenue is climbing like mad, and their profit's great, and it's just like another big quarter for them here. Yeah, we can read here that, their third quarter revenue was, we're talking about 30 some billion per quarter, 38% year over year increase. Wow, that's mad for that kind of size. I'm sure they're running their machines as much as they can, 24 hours nonstop, if possible, to print money, basically mint money. Yeah. Okay. So that's about it. Just the key points is, like, maybe I'll do a spreadsheet so that people who are joining this series can see exactly what went on. Robinhood is the darling of our portfolio so far, and I really like it, as I mentioned in almost every update. And also, I discussed about, like, my thoughts about holding these stocks earlier in this video, and whether to liquidate them or consider liquidating them to move into something. So that's kind of like all the key topics I touched on in this video. I hope you're all doing well in your portfolios, and this is helpful information. Please like if you do like, and don't forget to subscribe if you haven't done so and you don't want to miss a video. I'll catch you next time. Thank you.